Investing in the stock market, if you've ever tried it, can feel like trying to navigate a maze blindfolded. You've got endless streams of data coming at you from every direction. Stock charts, earnings reports, market news, political events, all while trying to predict what's going to happen next. It's overwhelming, and for most people, that uncertainty leads to anxiety, confusion, or worse, bad decisions. But what if there was a way to cut through all this noise? What if there was a tool that could analyze data at a speed and accuracy far beyond human capabilities? Something that could help you make smarter, more confident decisions without all the stress? That's where AI comes into play. In today's video, we'll be diving into how artificial intelligence is transforming the investment landscape, making it easier, faster, and even smarter. So, let's see how AI is changing the way we invest. Before AI entered the scene, investing was a completely different beast. It wasn't about automated algorithms crunching numbers for you. No, it was about poring over pages of financial statements, scanning news headlines, attending earnings calls, and trying to understand complicated graphs and trends. The goal was to sift through all this data to find patterns, figure out what was happening, and somehow guess where the market was headed next. But here's the catch. Not only was it time-consuming, but it was also extremely difficult to process all this information without making mistakes. Imagine trying to keep track of all the moving pieces, global events, earnings results, and economic shifts, all while making split-second decisions. And let's not forget about timing. The single most difficult part of investing. Knowing when to buy or sell could make or break your portfolio. One wrong move and your hard-earned money could disappear in an instant. It's no wonder that many people shy away from investing entirely, while others let emotions like fear and greed dictate their choices. Now let's fast forward to today. Enter AI, artificial intelligence. AI is changing the way we invest by analyzing large amounts of data quickly and accurately, something that would take humans hours or even days to process. In a nutshell, AI refers to the use of computer algorithms that can learn from data and make decisions based on patterns they uncover. The most remarkable thing about AI in investing is that it doesn't get tired, emotional, or distracted. AI can process massive datasets, analyze market trends, and predict potential outcomes in a fraction of the time it would take a human. While humans are prone to mistakes and biases, especially under pressure, AI simply uses data and logic to make predictions. What AI does is identify trends that may not be obvious to the human eye. For example, it might spot correlations between market movements and specific events that a human investor would miss. And since it learns from data, it continues to improve over time. The more data AI analyzes, the smarter it becomes. So, how does AI actually make these predictions? Well, it's all about data. AI looks at historical trends, identifies patterns, and makes forecasts based on the past. But it goes beyond just tracking the price movements of a single stock. AI takes a holistic approach, analyzing everything from company earnings to global economic factors, even social media and news articles. For example, let's say a company announces a major product launch. AI will analyze how previous launches have impacted the stock price, how the media reacted, and whether there were any other significant global events at the time. By comparing this data to what's happening now, it can make a prediction about how the stock might behave in the future under similar circumstances. It's not just guessing, it's using probabilities. AI processes all available data and looks for patterns to make its predictions. This approach allows investors to make more informed, data-backed decisions. AI's potential doesn't stop at predicting the market. It's also reshaping how we manage our investments through tools like robo-advisors. These AI-powered platforms are designed to take the hassle out of managing a portfolio. Here's how it works. You create an account, input your financial goals, risk tolerance, and investment preferences, and the robo-advisor uses this information to automatically create a diversified portfolio for you. But the magic doesn't stop there. Robo-advisors continuously monitor your portfolio, making adjustments as needed. Let's say one of your stocks starts underperforming, or another asset class is showing promising growth. AI will adjust the allocation to ensure you're on track to meet your goals. Unlike a human advisor, who may take days or weeks to assess and act on market changes, AI does this in real time, making decisions based on data rather than emotions or biases. It's like having a personal financial assistant that works tirelessly 24/7, ensuring your portfolio stays optimized. AI doesn't just analyze numbers, it can also understand the mood of the market through sentiment analysis. This means AI can scan thousands of news articles, tweets, and online discussions to gauge how people are feeling about a particular stock or sector. Think of it like a mood tracker for the market. Let's say a tech company releases a groundbreaking new product. AI scans social media platforms, financial news sites, and forums to determine whether the overall sentiment is positive or negative. Are investors excited about the new launch, or are there concerns about the company's future? This information can be a powerful predictor of how the market might react. By understanding the collective sentiment, AI can make more informed predictions about how stock prices might move based on public perception. So, what's the bottom line here? What makes AI so special when it comes to investing? Let's break it down. First and foremost, AI is incredibly fast. It can process massive amounts of data in real time, giving investors a significant edge when making decisions. This is especially important in today's fast-paced financial world, where every second counts. Second, AI is highly accurate. It can uncover patterns in the data that humans might overlook or misinterpret. And third, AI takes emotions out of the equation. Unlike humans, who may panic during a market dip or get overly optimistic during a rally, AI stays calm, focusing solely on the data to make logical decisions. But of course, nothing's perfect. While AI is incredibly powerful, it's still reliant on the data it's fed. If that data is flawed or incomplete, the predictions and recommendations could be inaccurate. Also, AI can't account for unforeseen events such as natural disasters, sudden market crashes, or geopolitical upheaval, things that can drastically affect the markets in unpredictable ways. As we look ahead, the future of investing with AI looks brighter than ever. AI technology is constantly improving, and its integration into investing is only going to become more widespread. In the near future, we may see AI-powered platforms that offer even more personalized investment strategies. Imagine an AI that not only looks at your financial goals and risk tolerance, but also takes into account your lifestyle, preferences, and even your personal values. For example, if you're passionate about sustainability, an AI could design a portfolio that focuses on green investments or companies that are committed to social responsibility. The possibilities are endless, and we're already seeing AI being used in more specialized areas of investing, like crypto or ESG, environmental, social, and governance investing. AI's ability to track trends, analyze market shifts, and even understand the emotional pulse of the market gives it an unprecedented advantage in these rapidly changing fields. The next step might be AI helping investors forecast and manage risk in ways we've never imagined before. Now, before we all rush to put all of our money into AI-driven investment tools, let's talk about some important risks and limitations. Despite its power, AI is far from flawless. One of the biggest concerns is data quality. If the data AI is analyzing is flawed, incomplete, or biased, the predictions it makes could lead to poor decisions. Remember, AI can only work with what it's given, and while AI can analyze patterns and trends, it still struggles to predict major, unpredictable events like economic crashes, political instability, or global pandemics. These events can cause huge market shifts that AI might not see coming. There's also the issue of over-reliance on automation. While it's tempting to let AI handle everything, it's still important to remain involved in your investment strategy and understand the underlying fundamentals. Don't let the AI be your only decision maker. Human judgment, intuition, and a solid understanding of market dynamics are still essential. So, how can you start incorporating AI into your own investment strategy? The good news is that getting started with AI-powered tools has never been easier. Many investment platforms now offer AI-driven insights and portfolio management for as little as a few dollars a month. Robo-advisors, for example, are an excellent starting point. These platforms will ask you a few questions about your financial goals and risk tolerance, and then they'll build and manage a portfolio for you. If you're interested in more advanced AI tools, there are also platforms that offer stock recommendations, real-time alerts, and even AI-powered analysis of market sentiment. But it's important to remember that these tools are just that, tools. They should be used to complement your own investment knowledge, not replace it. The best approach is to use AI for data analysis, trend spotting, and portfolio management, while you continue to make the final decisions based on your goals, risk appetite, and the big picture. In the end, AI is empowering the investor in ways we've never seen before. It's making investing more accessible, faster, and smarter. Whether you're a seasoned investor looking to gain an edge or a beginner wanting a hands-off approach, AI can help you navigate the complex world of investing with ease. But just like any tool, the key to success is knowing how to use it. AI isn't here to replace human judgment. It's here to enhance it. By combining the power of AI with your own knowledge and strategy, you can make better, more informed decisions and potentially improve your investment outcomes. The future of investing is here, and it's powered by AI. So, are you ready to embrace the future and start investing smarter? Thanks for watching. If you learned something new about AI and how it's changing the way we invest, make sure to hit that like button and subscribe for more insights. And if you're already using AI in your investment strategy, let me know in the comments below. I'd love to hear about your experiences. Until next time, happy investing and stay smart.